Hello and welcome to Business Today Television. I'm Siddharth Zarabi here from the Invest India Lounge on the promenade in Davos. Action-packed day one. Lots of details being sought about and for India. And on that note, let me introduce my panel with you today. Aashish Agarwal, the country head for India at Jefferies India, and Mahesh Nandurkar, managing director and head of research at India. Mahesh is someone who most of our market viewers would know very well. But on the show today, we are going to talk about what really is happening as far as the India story is concerned. And Ashish, I want to start with you first. The emergence of India as a compelling investment destination. This is a theme that's been resonating here at Davos consistently. Now that you are here and have spent a few hours on the ground, what are you picking up?
I think, so thank you for hosting us. Very quickly, I think India has been a compelling investment story for the whole of 2023 and even before that. And I think what has changed is we are already the fifth largest economy in the world and heading towards being the third largest economy in the next 4-5 years. With that, and I think what also helps is it's a pretty diversified economy. So it's not, just one sector or one commodity or one cycle that is driving. It's a very diversified economy where people have opportunity to invest in hard assets. People have an opportunity to invest in a very robust capital market, in real estate. So I think there is a lot more receptiveness towards investing in India. We, of course, represent the capital markets, and that's been an unprecedented year in 2023 from a markets perspective. While the FIS flows were not as impressive as one would like to be, I think Jefferies India alone accounted for almost $10 billion of net FII inflows in 2023, and we were part of some really marquee transactions. I think one of the things that has really picked up in India is the depth of equity markets. Gone are the days where large
and the story of retail participation along with that.
Yes, definitely. Yes. So I think retail participation continues to be very standing base of the markets. At the same time, what we see and hear from a lot of foreign investors is the depth of Indian markets has gone up significantly. At Jefferies India, we have done multiple blocks which have been in the range of $500 million to $2 billion. That's the kind of depth that nobody expected India to have about a couple of years back. And that's actually putting in the platform where more and more investors are trying to see how they can participate in the India investment story, either through capital markets or by owning hard assets directly, or of course through the entire tech space where we are seeing inflows.
Absolutely, a very interesting time in the country for us, both direct investment and portfolio working. Mahesh, to you, Ashish spoke about 2023 being a great year. We are still at the beginning of 2024. Will 2024 be equally interesting? And I'm not even counting that proverb that may you live in interesting times.
First of all, thank you, Siddharth, for hosting us. No, definitely we believe that 2024 has all the ingredients in place to build on the gains that we've seen over the last couple of years, including the CY23. Of course, I think one of the key themes that we're looking forward into the current calendar year, as Ashish mentioned, is a significantly greater participation from foreign investors. And I think what is also likely to give the community, the foreign investor community, a greater confidence is the emergence and the solid nature with which the domestic investors have acted as a cushion. Right, in previous times when foreign investors would sell, the markets would go down. That doesn't necessarily happen anymore.
And when they sell this time, retail investors, brave ones actually, buy on the dip.
We've seen the net buying from domestic investors, in a trailing 12 months, if you look at a certain point in time, was almost as much as $40 billion, matching the foreign selling dollar to dollar. And that's a very important thing because it gives, as I mentioned, a cushioning, kind of an environment. Secondly, it also
absorbs a bit of the volatility.
Big time, because I think now Indian market has also become a low vol or a low volatility market, which actually should go ahead and increase the confidence of the foreign investors as well. So that's clearly one of the key themes. But also, if you look at more from the economic standpoint, a theme that Ashish alluded to, we talked about real estate, power, but broadly speaking, the whole investment cycle. I think that is a key change, I would say, which has happened over the last 2 to 3 years. Over the last 10 years, investors were used to seeing the consumption story being very, very robust, but now we have a much stronger and added engine to that story, which is in the form of investments in infrastructure, in power, in real estate. I think, and that really gives a much more sustainability to economic growth from a long-term perspective.
I'll come back to some of those sectoral themes, but Ashish, to you, not a week or a fortnight passes without us seeing a marquee infrastructure launch. And I wonder, because we are at the Invest India booth, what kind of message does it send? Because I remember the public-private partnerships, the challenges that we saw, and infrastructure has seen 3 phases actually from 2000, last 24 years. We are perhaps in the 3rd phase. So particularly on infrastructure and the capex that is associated with it, the government of India and states also putting in a lot of money. Do you think that's going to sustain, or is 2024, because of our general elections, going to be a bit of a slow summer and then it will pick off after the results of the elections?
No, I think as Mahesh rightly alluded to, that we are definitely at the beginning of a long capex cycle. And what we saw is Government of India taking the forefront on that and rolling out a lot of infrastructure projects which have given the confidence to the Indian corporate sector. And now we are seeing a lot more corporate.
Is it the best? I'm sorry, I'm interrupting you, but just to sort of make it easier for our audience, is it because many of the sort of contractual issues, the policy tweaks that have happened in the last 5-10 years, that companies, both who are executing and investors, are finding it easier? Because remember, we used to spend so much time in infrastructure litigation. It was one of the biggest practices in law.
No, definitely, yes. I think we've come a long, long way as far as reforms or policy amendments have concerned. And also at the same time, I think a lot of capex from the Indian corporates have really paid off well. If you look at large infrastructure investments in terms of telecom, etc., they have started generating huge cash flows, some ports, some airports. So there is that confidence that is coming back to the corporate sector. What's interesting is we are also sitting at arguably the lowest leverage ratio that India has seen in a long, long period of time.
In fact, I was going to interrupt you once again on that last time when I heard bullish statements on infra, later on we saw, the house of debt sort of come crashing down. No such fears now?
No, actually, on the contrary, I would say India corporate sector is highly deleveraged and we should see a re-leveraging cycle along with, and that's what I was referring to, that it's very rare that you see that rates are at the peak and leverage is at the lowest level. So you will see a very unique combination of leverage going up as rates come down, which means if a project is viable today at a very high interest rate, the viability of that project will only go up, reducing the concerns of non-performing loans like we had in the last cycle. So to me, this one is a much more strong foundation and long-lasting cycle that we have seen any time in the last 15 years.
Mahesh, to you, and I want to continue with that. So would infrastructure, capex and perhaps real estate, and I don't know if you want to add to those, are those the key sectoral themes that you are kind of looking forward to?
Oh, absolutely. We are very, very optimistic about all these 3 themes that you mentioned. And I know that there is certain section within the market or in the investors who believe that some of the stocks belonging to these sectors have rallied, quite hard already.
And I would say that applies to many other sectors, the concerns around high valuations.
Yeah, true. So that is one of the concerns that we commonly come across when we interact with the foreign investors. But I believe that we are just in the beginning stage of what we kind of just mentioned as a multi-year, maybe a decade-long investment cycle, capex cycle. And it's natural for some of the stocks to trade at an elevated P multiple or other valuation multiples in the initial stage of the cycle. And I would definitely say that if there were to be some pullbacks, we would definitely be adding, onto those names, as a part of the pullback. But yes, apart from that, we definitely see, certain other segments of the market also pretty interesting. I would say telecom sector is looking, very, very very, very interesting. And in general, there are, several bottom-up ideas, especially on the manufacturing side, some of the segments that benefit from the China Plus One or the PLI schemes that the government has, been kind of advocating. So we clearly believe that what we are seeing in India today is a broad basing of the market, as against, let's say, if you look at, let's say, the US, where just 7-8 stocks have sort of accounted for bulk of the market returns, whereas it's the other way around. And clearly a lot of small caps are becoming mid caps, and mid caps becoming large caps, and that is a story we believe will continue.
I just want go ahead.
So I will just probably add, and you made a very interesting point on real estate. I think that's the biggest shift that we have seen in the last decade. Historically, housing in India has been a beneficiary of the economic activity, whereas in our view, the next decade, housing will be the driver of economic activity. So India will see a massive housing boom, which is not a price boom, but a construction boom. So you will see more houses being sold, which basically means the entire value chain of real estate, right from a developer to a cement player to a building material company. I think everybody in the value chain, and that's best from a Make in India perspective, because 80-90% of housing spend is localized. Land is local, labor is local, cement is local. So in my view, it achieves multiple objectives. People get houses, economic activity multiplier is huge.
And you believe that the ills of the past have sort of been done away with, the fact that RERA has come in, a cleanup in terms of bad debt has happened, and you have pretty good, impressive players who are very strong in regional markets now.
Definitely, yes. I think, if you mentioned policies, RERA has been a game changer. We have seen that large developers have become stronger. The buyer is far more confident of getting his home on time. So that propels further investment.
But within this within the real estate pie, is it going to be premium housing that will drive it, or is it going to, because affordable housing, frankly, has kind of underperformed, frankly?
No, I think it's where you are in the cycle. It starts with premium housing, then you go towards affordable housing, then the beauty of this cycle is it's across the board. So right from an affordable home to premium homes to super premium homes, I think post-COVID, the need for house has just gone up. Everybody needs their first house or the second house or a bigger house. So that's why it is going to be a long cycle.
Absolutely, and I'm reminded of what from your answer of the way the US real estate market went, but it also contributed to one of the biggest meltdowns. Mahesh, I want to pick up the telecom bit. I remember when Bharti Televentures listed, at that time it was a sort of groundbreaking moment for our markets, because it was part of the then sort of digital connectivity wave. And now we have, in fact, all around us, so many details about the UPI growth story and the other infrastructure. In terms of telecom, who do you think is likely going to win in the current pack? And within telecom, where do you see prospects for investors?
Actually, I would say that rather than whom, it's essentially a question of, I would say, the whole sector. And it's a very, I would say it's a very, very, I would say, consolidated sector at this point in time. And, what I would say is that, by and large, a good time to invest in the telecom sector has been in between two Capex cycles for that particular sector. And what we're clearly seeing is that the peak of the 5G Capex is now behind us. In fact, I would expect the telecom companies to deleverage over the next 2 years. And if you were to sort of not consider things like the tariff hike and EBITDA growth, just the deleveraging part itself will drive equity returns of 5 to 6% annually. And on top of that, we are expecting a pretty strong jump in the tariff as well. You'll remember that it's almost more than 2 years now since we saw the last tariff hike. And India remains one of the cheapest, in fact not one of the, probably the cheapest market in terms of the telecom sector pricing, and therefore affordability is very, very high. And I think that's what makes the sector as a whole very, very interesting at this point in time.
Quick follow-up, new age stock theme, the internet, e-commerce, consumption play was talked about. There was a bit of a reality check that the markets taught. They teach everyone lessons. How is that likely to pan out in 2024?
Yeah, no, you're right. A lot of that boom, as well as some of the reality check that you're referring to, was driven by what's been happening in the US and what's been happening in Nasdaq. So that has obviously weighed, and we have seen some kind of difficult times for private equity funding, venture funding, and what we are seeing, or what we have seen over the last one and a half years or so, is that the private equity and the venture funding have actually been selling down some of their stakes in some of the listed companies that we've seen. But my sense is that given the buoyancy in the capital markets, given, as you mentioned, this digital infrastructure, affordability, of the telecom services, etc., is, going to be a long-term structural driver for a lot of these new age businesses. And my sense is that this year and next year, you will probably see more listings in the new age economy sort of stocks, which, we had seen kind of, almost, sort of like stopping over the last 1 year or so. I think that cycle should come back again. And yes, you will see some selective names, doing kind of, much better. So I don't think it's going to be something like you just buy any name and that will go up. One will need to be selective.
There's so much to discuss, but as we wind down, I want to pick up another issue, and I'll come to you first on that, Mahesh, and then Ashish. This is, since you spoke about cycles, what about the interest rate cycle? When do you see that turn, if at all?
So I think the global interest rates, have peaked. The US interest rates have peaked. I think the question is, when do we start to see the rates going down? Currently, our expectation is that the US Fed will probably see something like 100 to 150 basis point rate cut during the current calendar year. And my sense is that even in India, we should be expecting about 50 basis point rate cut maybe toward the second half of the calendar year. So clearly the rates have peaked, and as Ashish mentioned, that it's a very interesting point that the rates have peaked and the Capex cycle has just started.
I'm going to add to that once the results of the next general election are known, and if the rate cut happens around that, I'm just wondering about the impact that it will have. I want to come to you on that because over the last 2 years, starting with COVID and after that, the markets, investors, and everyone, policymakers, realized that there is no certainty ever, and uncertainty is the only thing. We thought we got over COVID, something happened. Then now the latest, the Red Sea being the most recent. Is that uncertainty going to play on investor minds, or is everyone more resilient and brave with all the shocks that we have seen in the last few months, years actually?
No, I think, being a large economy also means that you are more intertwined with the rest of the world. So any global shock will have its implication or repercussions on India. We cannot be isolated anymore. Having said that, I think the opportunity there is that given that the entire rally in the last 12 to 18 months has been predominantly led by India retail investors and not so much by FII flows, every correction from here on will probably give an opportunity for FIIs to correct their underweight in India. So in our engagement, we constantly see people trying to make a shopping list that if this stock corrects 15%, I am a buyer here. So unless there is a major shock, I think every correction for India will be a buying opportunity.
Mahesh, last word on that very point before we wrap up.
No, absolutely. I continue to remain quite optimistic, on the markets here, not just from the near term, but more from the medium to long term perspective as well. And yeah, I do definitely agree that we will see some ups and downs. That's the nature of the markets. One can't really avoid that. But if there are not going to be any global sort of accidents, I think the India story, economic story is looking great. I mean, I would say that the current economic conditions are very similar to how it was back in 2005-06, and after which we saw multiple years of 8% plus real GDP growth. Maybe at that point in time we also had a big global tailwind as well. Maybe that is missing at this point in time because several other large economies are not really accelerating at this point in time.
Absolutely, Mahesh. And when that tailwind adds to the India story. Viewers, I can tell you, two very senior people who understand the world of investment in many, many ways. And this is the themes. We've not been out in the cold. We are inside. But I can tell you, the only theme that one consistently hears at Davos, and this is an opportunity to meet some of the best and the brightest, is the resilience and the expectation that India will continue to move forward. And what Mahesh said in the end, once some of the more advanced economies come out of recent troubles, that will provide a further tailwind. Ashish, Mahesh, thank you very much for your time with us. With that, it's a wrap on this conversation. We'll be back with more. Until then, goodbye.